Hey traders, Raghee here. Let's get a quick, I think we're good on audio and video. Just want to make sure. All right, happy Monday, everybody. Welcome to Charts and Coffee for Monday. Hope everyone is doing well. Yes, we're getting some interesting movement in terms of what's going on in the market today. Let's talk about it. No doubt. There we go. Yeah, no doubt we're getting some selling. And most of the questions that I've been getting have been surrounded by whether or not this is the Evergrande sort of reverberations. Is this pre-FOMC on Wednesday? Remember, we have FOMC day after tomorrow. We know that we've got news of Powell liquidating. I mean, it's kind of a hot mess out there, isn't it? So let's go ahead and talk about what is, probably the biggest question that we get. And I think I see that question in the timeline here. So we'll definitely address that and talk about what is the reality of dealing with, if this is going to be some prolonged weakness, what is the reality of the move? Okay. All right. So with that being said, let's jump into the first question. And that is right here. Good morning. Hey there, James. Should I look for this gap to get faded and get a better exit on my open positions, giving it until after the clearing range? So two things. As an intraday trader, looking at gaps, which this clearly is, I'm going to look at two things. Are we already beyond the daily price movement range for today? Okay. And, that's one of the things that we have to ask ourselves, because kind of like the most recent update over at Countdown Trader, we posted on the 17th here, time to get defensive. How do we process that kind of mindset? So if I am beyond the historical volatility for a single session on the open, I'm going to hit the pause button, my friend, just like we would if a market gaps beyond our entry zones. So we don't want to go rushing headlong on daily timeframes, fading this gap. However, intraday timeframes could give us a gap fade as day traders. There might be some fade on this, but just remember, when we open beyond the typical daily price movement range, and that might be new terminology for some folks here in the room. So what I'm talking about is straight up volatility analysis. Meaning, for example, on the S&P, if I open this up and I look at, I might have to refresh this, but if I look at the overall market movement over the past 6 months, and I look at what's sort of a normal, what are the normal operating temperatures for the S&P, and it's seeming to want to be a little fussy here this morning, but what I can get is what's known as a daily price movement range. And the daily price movement range, I'd really like to show you this to you guys. So let me log out and log back in. Just bear with me here. This is not going to cooperate. I did change my username on this the other day, so maybe it's just being fussy because of that. All right, so let's try this again. So what I want to show you is, what is the typical price movement range for the S&P? And are we beyond that? There we go. Okay. So this is known as the DPMR. It's just some acronyms that I use to describe historical volatility. If we've already moved, 52 points, we've got on the upper end of volatility a move that I would say makes sense to pause. The high for today's candle, the 20th, is 44.18. The low is currently 43.40. Have we exceeded that 52 points? Yes. And that's why I say, in those situations where the DPMR, the daily price movement range, has already been exceeded, James, be careful. But on the intraday, I don't have a problem with if you're looking to fade, as long as you see that setup. Okay. So thank you for the question. Abbas, when we get a gap down like we have today and say NQ, sure. We should look for about, oh, and hey, by the way, James, yes, if you're wondering, positions that I have long, for example, I have XLK. I'm going to wait till 10 a.m. I always wait till 10 a.m. to cut a trade loose. I will not cut a trade loose, take my paper cut usually until after 10 a.m. Okay. So yes, on that latter part of your question. So should we look for a bounce prior to today's value area high for a continuation down? Should we look for a bounce? NQ is repeatedly testing that second V score. Right. So how do you short? I would say limit your shorts to intraday for now. This is not a downtrend, right? For me, one grab candle does not make for a downtrend. One pullback that gets past the wave is not a downtrend. It does break, however, for those of you wondering, okay, Rag, what is the first step to a transition? And we talked about this last week, I think either in the futures room or the Sector Secrets Mastery. I believe it was Thursday's update. And I said, look, there's a process for a market to break an uptrend, transition to chop, which is the NQ is officially in chop today. Would I call this a downtrend? Let's look at the previous pullbacks that we've seen. It's hard for me to get really bent about this. It's hard for me to get overwhelmingly bearish about this. It could kick the door open to more bearishness, but I really have to remind everybody, this is the part of it where we have to remember what have we been doing, and had we panicked the way we're going to hear a lot of panic today, had we panicked here, 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 or even now, had we panicked in any of that, what is the overall movement that we've seen? It's been basically all of this. So at some point, I'm going to take a loss in my trend following, buy the dip ways. What is that loss going to be? It's going to be somewhere in the vicinity of that, as opposed to that, right? It's going to be less than a fourth of that move. So that's what I always keep in mind. Is there going to be one last trend trade? Absolutely. So as far as when I can shift to shorts, that +2 or that resistance you're seeing on the V-score ob, that's usually going to be more of a target for the upside for me, not picking a top. Look, you're going to hear about a lot of folks, because it's inevitable now. You turn on financial media, you look at FinTwit, you can hear all these folks talking about how they went to cash, how they're short. What they won't tell you, and I'm telling you, dollars to donuts, what they won't tell you is how many times previous to this, they also shorted and got their faces ripped off. This is what I absolutely loathe about perma bears. At some point, they get to celebrate the market pulling back, maybe even correcting in a more significant way. What they always cleverly omit is, well, yes, this is the 17th time I picked a top. Is it, so be very careful. This is the antithesis of trend following. Trend following accepts two things: the path of least resistance, and there's going to be one last trend trade. We have to be open to that possibility, which, it looks like we're kind of edging into now. So next question, AJ was planning on jumping in on Ethereum today. Any thoughts, AJ? I haven't even looked at it. Look, if you're a believer, here's what I will tell you. I don't play any crypto really for the short term. I'll trade it every now and then because with the price, we're getting volatility, and I might put on a trade that is a day trade or maybe a trade for a couple of days. But that's more the exception, not the rule. What I like to focus on is a far longer duration. So if I like that ETH is pulling back in a more significant way, it's that far longer duration. You might say, how long? I'm talking 6 months, years, right? I'm not looking at whether I can buy it now and it'll be higher in a week or two. So my duration may not be necessarily something that would appeal to a lot of crypto traders. I've got a longer term approach to crypto. And by the way, what I have running on the charts right now, and I'm going to clean this up because it makes it look kind of like a mess, is I have an indicator running that I've run on and off here a bit, which is a 5, 3, 2, 1% sell-off measurement, just to put into context of what a 1% correction, 2%, 3%, 5% correction would be. Where are those levels? We'll talk about that a little bit more in the close today in the futures room. I'll show this to you all in the options room, and I'll be in the Sector Secrets Mastery Room right after Charts and Coffee. We're going to talk about position sizing, all those things that we can sort of ignore and not really fine tune when the markets are going in our favor. All of a sudden, when the markets roll over, position sizing, stops, how we exit, retracements versus reversals. In other words, is this a dip or a downtrend? Those kind of things we're going to address immediately after Charts and Coffee in the sector room. Okay. So the next question is, can we please take a look at XLF? Sure. So we've got it on the screen right now. Clearly, with what's happening in the S&P, we're going to see weakness in XLF. I mean, that's not a news flash to anybody, right? So if I pull up XLF here, you can see pre-market, we're way down here. So for those of you thinking, oh my gosh, 36.44, we were sitting at about 37.55. This is a dollar below. It's a big gap. If there's anything that hurts trend followers, there's a few things that hurts us. One's going to be clearly choppy markets. The other is going to be a gap. And when I look at taking paper cuts, this is going to be difficult, right? We are always susceptible to these gaps on the open. But at the same time, what we try to do, and this is really important, when you limit the budget on an entry, in other words, you limit the spend, okay? You're already thinking about risk control to a certain degree. I like to keep my spend risk really at 25% and really no greater than 50 being reserved for times where we're dealing with greater volatility. We're dealing with a major economic release. So there's hot zones coming out, increasing the volatility, increasing the chaos. I kind of reserve that for those situations. But are we going to see paper cuts today, in some of these positions? Absolutely. But we can't forget that it's some of these same trends that, quite frankly, not just throughout summer, but throughout the year, we've been rolling with. Now, obviously, the challenge is, when did I, meaning individually, when did you get into the market? When did I get into the market? And what's the risk relative to previous trades? Sometimes there's that misfortune of, but Rog, this was my first trade in XLF. And that's just sometimes how the cookie crumbles, as they say. But remember that when you map this out throughout your career, when you map out a trend following process throughout your career, and you study your trades over the course of a month, you study your trades cumulatively over the course of a quarter and a year, you will, if you're a trend follower, come out ahead as opposed to a top picker. And when you do have these types of gaps that are moving against us, again, remember, we will see trends again. Okay, and we will start buying the dip and playing, or it might be selling the rip, right? Uptrend, downtrend, whatever it is, buy the dip, sell the rip. We'll go back into that mode. And we'll also get specific about which corners of the market are really in better shape, which corners of the market are going to be more resilient. And that's going to be a big part of what we're going to do this week. We're going to take a look at our watch list, rebuild the watch list, find the relative outperformers. That's one of the reasons I love ETFs. But we can talk about that at another time. But for everything, Kevin, I'm just going to hit the pause button for now. And I'm going to go into risk managed mode. I'm not going to go into opportunistic mode until we can start to see patterns and re-entries form again. Okay. So thanks for the question. All right. Thoughts on natural gas? Look, in this case, natural gas, talk about trend following and path of least resistance. This has been a monster trade for us. Natural gas has been great. What we've been doing is trailing a stop. At some point, the trailed stop is going to get hit and we're done. That's it. Will we look to re-enter? I've got to wait for the next opportunity. Would I buy at the current levels? Probably not. Would I trail a stop? Yeah, we've been trailing stops now. This is a 7x trade. I mean, we're 7x the original entry back here back in late August, mid to late August. So now I'm just in trend following mode, but the trade management of that, which is just I think we're up to our fourth ratcheted trailing stop, just kind of putting a safety net underneath price action. So I'm not in re-entry mode yet, but it's been a great trade for us. This is what I mean about just get out of the way of the trend and stick with it. All right, once I have the setup, what is the trigger to buy a dip and when do you enter? Dan, it depends on the setup, right? There's so many. I would love to say there's one textbook example of how to buy a dip. But I will tell you this, everything starts with structure. I mean, the setup begins with structure. The setup begins with, do we have still a double green trend? And then we can start looking at things like the wave, volume ledges, Darvis, patterns, propulsion. That's when I can start going through my checklist and then find out how many levels do I have multiple instances of stacking of those. Are they layering, right? Do I have a volume ledge in the wave, or do I have a volume ledge in Darvis and propulsion? Then I'll start to look for where those are sort of stacking upon one another. But it's always going to, major psychological levels would be another one. Some folks can throw Fibonacci levels in there. Those are all kinds of markets that, or market behavior, market indicators that I'll look for. All right. As far as XLK and XLF, yeah, I'm in the same boat with you, Charlie. XLK, yeah, XLF, they're going to take the paper cut. Charlie, I'm going to talk about that in the Sector Secrets room. Take the paper cut, right? I'm going to wait till 10 o'clock. Let's let the clearing go by. And then I'm going to take the paper cut. And that's the way we trade. I mean, I think that there is this kind of thinking where this particular sell-off was somehow something we could see ahead of time. Gang, the only people who see these ahead of time are the same folks who've picked tops 3, 4, 5, 6 times earlier, which is to say they're not right. It's kind of more like a broken clock is right twice a day, right? Even a blind squirrel finds a nut, you know what I'm saying? So that's not, we don't want to think that, there was something that tells us that this was the top. No, there is no setup that is habitually going to tell you that this was a top as opposed to 3 or 4 other peaky markets that continued to move higher. But there are clues in the structure, right? Now, am I okay with buying markets that go into yellow? Yes, but if you're wondering, Rog, are there any clues that cue us in? Yeah, there's usually going to be a structural cue. So if you're looking for a market to indicate a top through some sort of oscillator, right? Whatever that may be, you want to coordinate. You have to coordinate that with the shift in the structure. So if you are looking at tops through all of this, it was futile. If you're suddenly looking for tops in this, it's not that it's going to work all the time, because remember, this did not work. The market went, higher significantly after that. But if you're looking for those cues, the top line of the JT multi going red, the bottom row of the JT multi yellow, that at least puts you in a higher probability scenario for, well, if I get another signal that says we're overbought top, right? Is that possibly more likely to work in this environment as opposed to everything we saw in, say, XLV between the 21st of June to the 9th of September, where I bought dips, right? And then if we finally get stopped out within the dip buying range and the profit, we know there's going to be one last trend trade. And I hope to get that message across as consistently as I can. So first of all, no, nobody knows that this was the top. And if this was the top for them, that means they picked the top 3 other times earlier. Please, I know what the conversation on financial media is going to be like. I know what the conversation on FinTwit's going to be like. Everybody was in cash. You know who went to cash before this? I believe some Federal Reserve members. When they start giving us their newsletter and their S&P target, I will be happy to subscribe to that service. But until then, remember, all the dips are opportunities. What's the difference between a dip and a downtrend? It's actually how long that weakness is sustained. It's going to take me a minimum of 8 sessions to say that any of the dips that we're getting right now aren't simply volatility within the context of the move. And how many folks are wondering, let's say beyond Evergrande, what about the Federal Reserve on Wednesday? You think they're going to go out full steam ahead about taper if the Dow sells off 500 points? So the very sell-off in fear of what the Federal Reserve could say. I'm using the Dow as an example. Could be the very reason they hit the pause button, at least waiting until November, things like that. So balance all that out. Remember that there are certain corners of the market that have been weaker. The Dow is a really great example. And there's certain corners of the market that have been stronger. The NASDAQ is a great example. And that's why I love to focus on the ETFs, and because they give us that more granular look. And then we can see the stocks within them and get even more detailed, finding those relative outperformers, finding the resiliency in the market. And that could be weakness or strength, okay? And just like that, gang, our session is done. Thanks, as always, for the questions. And please remember, I don't see parallels to 2008. We react. We don't pick tops. We don't say, well, this is the top. We don't say, well, yeah, of course, this is where the markets are. No. What we do is we wait for the evidence of the rollover. So in 08, for example, yeah, once the downtrend and my process for recognizing dip has gone, downtrend was recognized, that's when we shift gears. I did this at the end of 2018. I did this at the end of 2019. Those signals will come, but they don't come in a single candle. Thanks as always for being a part of Charts and Coffee. I'll see you all tomorrow, same time, same station. So my sector folks, my sector secrets mastery, I'll see you all in the chat room in just a few minutes. All right, gang, be good to each other. Practice the paper cuts, practice some risk management here, and I'll see you all tomorrow at 9.